This is Shelley Craft coming to you live on SNNLive. We're at the Cambridge House Resource Investment Conference 2014, right here in Vancouver, BC, Canada. I have with me Leonard Melman, the Melman Report. He's a newsletter writer and a featured speaker here at Cambridge House. Leonard, welcome back to SNNLive.
It's good to be with you again, Shelley. I look forward to these conversations.
It's good to have you. So one of the things that I was thinking about before we went on camera was the fact that by asking you certain questions, we continue to get in measure a temperature of the market. How do you feel about that?
Well, I agree with you. Over the years, it's good to look back and see what you have said and then look forward. And right now I'm looking forward, and I'm liking much of what I see in terms of the gold and silver and the other metals.
Why? Are you like feeling that the bottom, that long-awaited bottom is either here or near?
I really believe that. As a matter of fact, if you look at the attendance at this convention, it's phenomenal. The aisles are crowded like they used to be. People are bustling. They're excited. And I think it's because there is a spreading feeling that the bottom, if it's not already in, is very, very close. And people, I think, are looking for bargain shares that sold for $1 that are now 6 or 7 cents. And the prevailing opinion might be moving in the direction of, hey, I can buy these for 7 cents. My risk is 7 cents. But if they go up, they could go to 50, 75, $1, and I can make many multiples. So I think the risk-reward ratio is moving in favor of the speculator. And the other side of the coin is I've talked to a couple of executives, and they are buying up properties that financially weak juniors have to get rid of at any price. One man I talked to had just bought a property for $100,000 that 2 years ago was on the market for $7 million. So there are some real interested people, both from the investment speculator to the mining executives. And I happen to agree that the conditions are growing that could indeed spell a much better market this year than last year. And I'll give you just a quick review. I honestly believe, first of all, and most dangerously, the level of international terrorism could be on the rise. As the U.S. has left Iraq and Iraq and Afghanistan, we've noticed a very sharp increase in the number of violent events that have taken place. It must be remembered that both those countries are very close geographically to the oil distribution networks of the world. The influence of Iraq and the Taliban and Al-Qaeda into Syria is growing, and an offshoot of that is that Syria is beginning to infiltrate into Lebanon, and Lebanon is right next door to Israel. And of course we know the possibility of conflict in that area is very high. So this feeling of a growth of international terrorism might cause some people to look at some hedges from their normal investing, and of course gold and silver are among those. Another factor which is getting enormous publicity is the wage price spiral that's suddenly starting. We're getting minimum wage increases in virtually every state in the union, in the federal registration, federal laws, and overseas, gosh, in Southeast Asia, we're seeing 50, 60, 80% increases in wages. Those bode well for an anticipation of higher inflation. Of course, nothing is better for the metals, or worse than for society, than a rapid increase in inflation. So there's quite a few things out there that I think bode well for the metals going into this year. And there's one longer range one that to me is important. I believe delusions evaporate, and when they evaporate, they do it suddenly. And to my way of thinking, for the United States government to run $900 billion deficits, finance those deficits with artificially created currency from the Federal Reserve, and have that currency still expect to retain value is, I believe, a delusion. And if society ever gets the feeling that it's truly a delusion that could evaporate, then of course you could put any limit you want on the price of the metals. So there's a lot of features out there that I think could augur well for gold and silver during 2014. And judging by the size of the crowds here, apparently a lot of other people feel the same way.
So here's what I'm going to pick up on. I understand that that could be true, especially for districts that are in North America and even South America. But when you start to get some of these African nations and some of these offshoots of, outside of the United States and North America, now you begin to run into the same dangers that you're talking about.
Very much so. But by the way, speaking of Africa, Asia, and we could include South America as well, I saw a very interesting statistic, and it had to do with the fact that one of the international agencies was forecasting a growth in the middle class around the world, which is presently about 1.2 billion people, to almost 5 billion within about 2 generations. Well, just think of the amount of consumer spending and activity that could be generated if that turns out to be true. And I think that could be another force toward increasing inflation. Yes, there is instability in those countries, but nevertheless, I think they're moving toward advancing prosperity.
Okay, so if you had to wrap up guidance in your newsletter, tell me the key point, one key point that would give your readership influence and guidance.
The one key thing I'm looking for is the continuation of the artificial creation of currency by the Fed. They talk about easing back on quantitative easing, but so far it's just talk. There are anywhere from $800 billion to $1 trillion worth of artificial currency that's being forced into the system. As long as that continues, I see much brighter days ahead for the precious metals and the base metals investors. Of course, the corollary to that, or the opposite, is that it could heighten the risk of the actual functioning of the general society. But of course, gold has always been the countermeasure of that functioning.
Ladies and gentlemen, Leonard Melman. Always something to say. So this is the first quarter of 2014. Just to give a measure, we can always go back and see in history what Leonard said. He writes the Melman Report, which is a newsletter. And by the way, what's your website?
It's www.themelmanreport.com.
It's Melman, not mailman, but Melman. Ladies and gentlemen, Leonard Melman. I'm Shelley Kraft. This is SNNLive. We're at the Cambridge House Resource Investment Conference 2014 in Vancouver. You are like the mailman. Leonard, welcome. And
Always
thank you
a
very
pleasure.
much for coming.
Thanks.